Are you ready to uncover the shocking truth behind one of the biggest financial collapses in history? It began, as so many financial disasters do, with a whisper. A whisper that quickly turned into a murmur and then a roar that echoed through the hallowed halls of Wall Street. A tremor in the market, a sudden dip in numbers that sent shockwaves through the financial community. A blip on a screen that no one, at least no one who mattered, seemed to notice. It was a warning sign, a precursor to the chaos that was about to unfold. This was not some small-time operation on the brink. This was Lehman Brothers, a titan of the financial world, a name synonymous with Wall Street power, influence and prestige. Lehman Brothers was a cornerstone of the American financial system, a 158-year-old institution that had weathered storms and emerged stronger. It had survived wars, depressions and countless market fluctuations. But in the late 2000s, the winds of change carried something more ominous. The financial landscape was shifting, and Lehman Brothers was at the epicenter of this seismic change. The very foundation of Lehman Brothers, built on a bedrock of perceived stability, was about to crumble. The cracks were beginning to show, and the once unshakable institution was on the verge of collapse. The year was 2008. The world watched aghast as the seemingly invincible American financial system teetered on the precipice. The world watched, aghast, as the seemingly invincible American financial system teetered on the precipice. The collapse of Lehman Brothers sent shockwaves through the global economy. At the heart of this crisis lay a toxic cocktail of greed, recklessness, and an unquenchable thirst for profit. The pursuit of wealth had blinded many to the risks they were taking. And caught in the eye of this financial storm was Lehman Brothers, a firm whose fate would become inextricably intertwined with the worst economic meltdown since the Great Depression. The fall of Lehman Brothers was not just a corporate failure, it was a symbol of the fragility of the entire financial system. This is not just a story of numbers and balance sheets, it is a story of people, of lives upended and dreams shattered. It is a human drama, a cautionary tale of ambition and hubris. The rise and fall of Lehman Brothers is a stark reminder of the dangers of unchecked ambition and the perils of a system driven by greed. It is the story of how Lehman Brothers, a firm that had once epitomized American capitalism, came to symbolize its spectacular failure. The legacy of Lehman Brothers serves as a cautionary tale for future generations, a reminder of the consequences of excess and the importance of vigilance in the world of finance. The story of Lehman Brothers began in 1844, far from the canyons of Wall Street, in the heart of the American South. It was a time when America was still finding its footing, a land of promise and potential. Three brothers, Henry, Emmanuel and Mayer Lehman, emigrated from Bavaria to Montgomery, Alabama, seeking opportunity in a new land. They were driven by dreams of prosperity and the hope of building a better future. They established a humble dry goods store, trading in the lifeblood of the South, cotton. Cotton was not just a commodity. It was the backbone of the Southern economy, a symbol of growth and wealth. This was the seed from which the sprawling oak of Lehman Brothers would eventually grow. Like the oak, their business started small but had the potential to become something grand and enduring. From their modest beginnings, the Lehman Brothers displayed a keen business acumen and an unwavering work ethic. They understood the importance of seizing opportunities and making strategic decisions. They rode the wave of America's westward expansion, opening offices in New York City and becoming major players in the burgeoning commodities market. The move to New York marked a significant turning point, positioning them at the heart of American commerce. Their reach extended beyond cotton, encompassing coffee, coal, and other raw materials that fueled the engine of a growing nation. They diversified their interests, understanding that a broad portfolio was key to long-term success. With each successful venture, the name Lehman became more synonymous with financial prowess. Their reputation grew, and so did their influence in the financial world. The firm navigated the tumultuous waters of the late 19th and early 20th centuries, weathering economic panics and world wars. These challenges tested their resilience but also showcased their ability to adapt and thrive. They diversified their portfolio, venturing into the realm of railroads, entertainment, and eventually the burgeoning world of Wall Street finance. Each new venture was a step towards building a financial empire. Each generation seemed to build upon the successes of the last, solidifying the firm's reputation as a titan of American industry. The legacy of the Lehman Brothers was carried forward by their descendants, who continued to innovate and expand. By the dawn of the 21st century, Lehman Brothers stood as a colossus, a symbol of American financial might, seemingly invincible. They had become a cornerstone of Wall Street, influencing markets and economies worldwide. But even the mightiest of oaks can be felled by unseen rot. Beneath the surface, hidden vulnerabilities can grow, threatening the stability of even the most formidable institutions. The story of Lehman Brothers is not just one of success and growth, but also a cautionary tale of how unchecked ambition and unseen risks can lead to downfall. It serves as a reminder that in the world of finance, vigilance and integrity are paramount. As we reflect on a century of ascent, we are reminded of the delicate balance between ambition and caution, growth and sustainability. The legacy of Lehman Brothers continues to echo through the halls of finance, a testament to both the heights of success and the depths of failure. In the years leading up to the 2008 crisis, a dangerous game was afoot on Wall Street. It was the era of easy credit, of subprime mortgages being bundled and sold as safe investments. These complex financial instruments, known as mortgage-backed securities, were the serpent's egg, promising great rewards but harboring a deadly poison within. Lehman Brothers, like many of its peers, was seduced by the allure of these subprime investments. They saw an opportunity to reap enormous profits by packaging and selling these risky mortgages to investors hungry for higher returns. What they failed to grasp or chose to ignore was the ticking time bomb embedded within these securities. Fueled by a culture of greed and a belief that the good times would last forever, Lehman Brothers dove headfirst into the subprime mortgage market. They became one of the biggest players in this high-stakes game, amassing a portfolio laden with these toxic assets. What they didn't realize was that they were building their house on a foundation of sand. When the tide turned, as it inevitably would, the entire edifice would come crashing down. Section 4. The ground begins to tremble. Early warning signs ignored. As early as 2006, cracks began to appear in the facade of the American housing market. The once seemingly invincible structure of the housing market started to show signs of vulnerability, hinting at the chaos that was to come. Default rates on subprime mortgages started to tick upward. These subprime mortgages given to borrowers with poor credit histories were the first to show signs of distress. The increase in defaults was a clear signal that the foundation of the housing market was weakening. The first tremors of the impending earthquake were felt, but few in the financial world heeded the warning. These early signs were dismissed as minor fluctuations, mere ripples in an otherwise calm sea. Lehman Brothers, blinded by years of prosperity and intoxicated by the profits generated by their subprime investments, dismissed these warning signs as temporary blips in an otherwise healthy market. They believed that the market would correct itself, that the good times would continue to roll. Internal voices urging caution were silenced. Those who raised concerns were often ignored or ridiculed, their warnings falling on deaf ears. The culture within Lehman Brothers was one of relentless optimism, where skepticism was seen as a lack of faith in the market. Analysts who dared to question the sustainability of the subprime boom were sidelined. Their cautious approach was seen as a hindrance to the aggressive growth strategies that had brought the firm so much success. The firm's leadership, drunk on their own success, doubled down on their risky bets, convinced that they were smarter than the market, that they could ride out any storm. They believed that their sophisticated financial models and strategies would protect them from any downturn. This arrogance, this unshakable belief in their own invincibility, would prove to be their undoing. They failed to see that their overconfidence was leading them down a path of destruction. The ground continued to tremble, the tremors growing more frequent, the warning signs more ominous. The cracks in the housing market were widening, and the financial system was beginning to feel the strain. But Lehman Brothers, blinded by greed and deaf to the growing chorus of concern, clung to their belief that the music wouldn't stop, that the party would go on forever. They were wrong, dead wrong. Their refusal to acknowledge the reality of the situation, their insistence on maintaining the status quo, would ultimately lead to their downfall. The early warning signs were there, but they chose to ignore them, and the consequences were catastrophic. Section 5. The Ides of September, Lehman's Last Stand. By the summer of 2008, the once invincible American housing market was in freefall. Subprime mortgages were defaulting at an alarming rate. The financial instruments built on these toxic assets, those complex packages of debt that Lehman Brothers had so eagerly scooped up, were revealed to be worthless. Panic began to grip the financial world. On September 15th, 2008, Lehman Brothers, once a symbol of American financial might, filed for bankruptcy. The news sent shockwaves through the global financial system. It was the largest bankruptcy filing in American history, dwarfing anything that had come before. The collapse of Lehman Brothers marked a turning point in the crisis, a stark realization that no institution, no matter how large or seemingly invincible, was immune to the forces unleashed by the subprime meltdown. The collapse of Lehman Brothers was not just the failure of a single company, it was a systemic failure, a canary in the coal mine that exposed the fragility of the entire global financial system. The consequences of this failure would be felt for years to come. The collapse of Lehman Brothers was a pivotal moment in financial history, highlighting the vulnerabilities of even the mightiest institutions. If you found this video insightful, please give it a thumbs up. Share your thoughts in the comments below, and don't forget to subscribe for more deep dives into the events that shape our world. Thank you for watching.